All righty, welcome, everybody. My name is Kellam, and this is Crypto Answered. We do this every Thursday, or as many Thursdays as possible as we can. We have a wonderful lineup of guests for you for today's show. Today is Thursday, September 1st, the first day of the month. August has ended. There's a little bit of a bloodbath, sideways and bloodbath. What's in store for September? Well, we're going to dive into that. We've got some wonderful guests lined up. I'm just going to briefly introduce them. And just for anybody that hasn't, maybe this is your first time listening, maybe you haven't listened in a while, we did recently partner with PennyFly Entertainment, which is at PennyFly ENT, which means we also have distribution now on some major podcast networks that includes iHeartRadio, Spotify, Apple Music, and a lot of the major podcast networks. So I'm going to make sure that people listening, whether you're listening here on Twitter or if you're listening to the recording on a podcast on one of the other channels, I'm going to call out towards the beginning and probably towards the end as well the handles for these folks, just in case you're listening on another medium. But if you are listening here on Twitter Spaces, we really appreciate you tuning in. We've really built quite a community here on Crypto Answered over the last year, along with my co-host, Dr. Harry J. Malinsky, Mr. CryptoVet. So let's go ahead and just start with him. How are you doing today, good sir?
I'm doing great, man. Just been doing some stuff around the house. Finally got some cool weather here, so I'm excited to see what everybody has to say and see if I can offer any good input. Excited to be here. Thanks, Kelly.
Yeah, man. And love having you here. For anybody that doesn't know, CryptoVet was actually my first guest around this same time last year. And he just proceeded to basically be my roll dog throughout. Now we've been building this out, and I couldn't be more honored to have him aboard and really appreciate all he does. And him and he's also tied in with the PennyFly Entertainment group. So thank you for that. And you can find him at CryptoVet _. And he always puts out a lot of great information, charts, thoughts, and even some humorous stuff that'll tickle your funny bone. So with that, we'll just dive on in and we'll go ahead. I'm just going to do a brief introduction of the guests today. And then rather than just do the long intros, I'll do a brief intro and then just get the conversation rolling. So today we've got a basically powerhouse, legendary lineup of guests. We got the Wolf of All Streets, known as Scott Melker. You can find him at Scott Melker. He's also got not only a wonderful, like incredibly beneficial Twitter account to follow if you are in crypto, but also he has a YouTube show as well as the Wolf of All Streets.io, where he has a free newsletter that he puts out. And you catch him at basically nearly any crypto convention around the world. He seems to be hosting desks everywhere. We also got Crypto Wendy O in the house. Very happy to have her back. You can find her at Crypto Wendy O. And she also has a Twitter, amazing Twitter, great YouTube show, newsletter. And she's just got a ton of insight on the markets. Excellent with TA. We were so happy to have her back here. And then first time on the show, we have Titan of Crypto, which is at WASHIGORIRA. Washi Gorira, I think, if I'm pronouncing that correctly. And then we have one of our he's basically he's been a guest on the show several times. It's been a while, but we love having him on. He's just a wizard with on-chain metrics as well as TA, and just great macro insights on the market, just as every one of these other guests. And you can find him at The Rational Root. So I'm really excited to have him back and talking about everything going on with the macro and the local view. I feel like everybody's a little bit sideways right now, trying to figure out with these historical metrics showing some possibilities, some huge bullish fractals, while we have absolute detrimental bearish sort of headwinds that we're fighting through. In my initial perspective on all this, I can say that it really is phenomenal that Bitcoin is held as strong as it has with everything that's happened. So with that, we'll just dive on into the conversation, and please make sure and check each one of these guest speakers. Go check out their Twitter profiles at least. Give them a follow. They all share a wide variety of content, sometimes different ideas, contested ideas between each other, and that's okay. It's good to have a broad view of the market. And all these folks that post stuff, they post it with thought, not just with bias. It's more like, this is what I'm seeing. Here's why. And that's the type of people I like to follow, so I can learn from why somebody sees what they're seeing in the charts whether or not I agree with it, at least I'm learning and going through new ways of thinking potentially. So it's great. So just to kick this off, I'm going to bring up Miss Wendy O. We haven't had you on in a while. How are you doing? How are you feeling about the markets? Anything exciting? Just what's going on?
Hi, so happy to be here. Big shout out to all of the listeners. Shout out to everybody on the panel. Right now, I'm just kind of chilling. Like, we have been in really tight consolidation ranges, and they're like $1,000 each, which is kind of scary. And most traders know that trading the chops are hard. I'm not doing a whole lot of trading myself. There's a lot of kind of insanity when it comes to the market. One interesting thing about this particular bear market is we did have the crypto contagion that occurred, and we also are in a very interesting period for Bitcoin. Bitcoin was essentially created, from what I understood reading the white paper, it was created out of 2008, and it was created so people could get their power back, and it's supposed to be kind of this hedge against inflation, this hard money that we can hold, that we can have complete control over if you're using cold storage wallet, etc. But it's kind of being put to the test right now, especially with all the money printing and the inflation, the housing market, everything. So I'm just kind of taking a step back and just trying to preserve my capital and watching the markets. If I can see a clear trade, I'm more than happy to take it, but realistically, it's kind of scary just because of these small consolidation ranges and these chops that are occurring. Another thing that I want to add is I do have bids set all the way down to $9,500 Bitcoin. I don't think we've in fact bottomed yet, which is which is kind of important to note. And I'm just reminding my audience to be very cautious what they do. And if they do decide to dollar cost average or enter into any types of trades, to make sure to have either a trading or investing plan with both a bullish scenario and a bear scenario, just so that they can kind of gauge how much they're willing to risk, how much they're willing to lose, what their plan is. Do they have an exit plan? And to really kind of focus and use critical thinking skills, especially in a time like this when the markets are super volatile.
No, I mean you nailed it right on the head. I'll just throw it. I'll just parlay that straight over to Mr. Scott Melker. You can add just any comments on either what Wendy said or just your general thoughts of how you're feeling in the market. Your inner bull and your data realist. Like, how are you feeling about what's going on?
Hey, Kelly, what's up, man? Thank you guys for having me. What's up, Wendy? How are you? Long time no speak, at least a couple weeks. Um, yeah, so I mean, I basically agree with everything that Wendy just said, obviously, except for that I would go a step further and say, just don't bother to trade this market, right? Which has been a feeling that I've had for quite a while, to be quite frank. I think that is one of the most complex markets I've seen to trade in a very long time. For Obviously trading chop is difficult, but for more specifically, this is the first time. So I mean, I've been trading everything for a long time, but this is the first time since I started trading crypto. I think you actually have to be extremely cognizant and educated on macro, and frankly, people just aren't, right? And that's not a criticism, but most people who came into crypto, this is their first foray into trading and investing. They're younger, they don't have really the education in macro, and everybody's just sort of winging it, pretending to be an expert on inflation, monetary policy, and such. And the fact is that right now, crypto has to be viewed in a macro lens, which is funny because listen, I've come on here many months ago and extolled the virtues of Bitcoin as an uncorrelated asset. And well, I turned out to be wrong, right? It's uncorrelated over a 10-year period, but in the very short term, certainly over the last few months, it's a hell of a lot more important what the Fed says than what the chart says. And so to me, it seems just like the obvious play to sort of do what Wendy do, which is just dollar cost average, continue your investing strategy. uh, People who get scared to dollar cost average just because the market are down are literally missing the entire point, right? You want to catch it at the lows. You may not buy the dead bottom if you're a trader, but you'll probably get a tiny piece of it if you continue to dollar cost average. I can only say anecdotally that when I was a much shittier trader and investor, I finally got money again in 2006 after going broke multiple times. I started to dollar cost average into SPY in early 2007 just to sort of get exposure to the market again. And I basically, top ticked it on the way up right before the major market crash. But luckily, I continued to dollar cost average through the entire market crash all the way through 2012, wanting to puke down, 50, 60, 70%. But, come a year ago, I continued doing that for 14 or 15 years and literally until a few months ago, every single buy I ever made was in profit, right? And so the cost basis ends up much lower if you continue to do that. So that's what I would recommend, because I think we all agree that there's a everything bull market coming. It's just a matter of how many months or years it takes to get there.
Yeah, I mean, I couldn't agree more with that. And you kind of made me laugh a little bit with compassionate empathy about trading in that basically market crash of '08 all the way through 12. I'm sure you had to endure a lot of chop. If anything else, the silver lining with that was, as you got into crypto and Bitcoin, you had weathered basically massive downtrend and saw it resolve, right? But one of the things you pointed out was, you know, more. We should all aim to have more of a better understanding of macro environments and all that goes into it. But I feel like I'm curious your thoughts on this, Scott and Wendy, and then we'll throw it back. Then we'll throw it over to Root. That one of the things that I've found myself in my journey, learning crypto, learning trading, all this over the last 6 years, is every time I get a new tool, whether it's a knowledge of a new indicator, or if it's knowledge of correlation with a certain asset, whatever it is, it doesn't matter. There's this tendency I've had, and I feel like other people have felt this too, where you get this new tool, and then all of a sudden we have the arrogance to think, now I got the market. Now that I understand this correlation with 10-year bonds, or not. And what my question is, how do you not drown in all the data that you're trying to balance to make decisions?
It's a great question. I talk about over analysis paralysis all the time. And I think anyone who's been trading for a long time, certainly technically, has gone through effectively every sort of phase of the trader, right? It's been a Ichimoku clouds, supply, demand, support, resistance, RSI, OBV, whatever, right? As you said, there's a million indicators. People used to laugh at me in like 2016, 2017. I used to post these charts that looked like a Pink Floyd laser light show. There's like 9,000 lines on it and 17 indicators. And that shit's just embarrassing, right? So the longer that you do this, the more you realize, frankly, that, as you said, you can't be arrogant, right? There's two kinds of traders: those who have been humbled by the market, and those who will be humbled by the market, right? And so when you realize that, you know that you don't basically know anything. The whole point of your indicator, your chart, or your analysis is effectively to give you uh, actionable information on where to place your stop loss and take profit, right? And that can be completely different than someone else's analysis. You show a chart to 100 people, you get 100 different interpretations because of 100 different indicators and strategies. The reality is that the chart doesn't tell you the future. What it does is, even if you're just literally like, throwing unicorn dust and reading tea leaves, it gives you a reason to set your stop loss, to position size correctly, and know where you're going to exit. So I think once you come to that agreement, and you've that understanding, and you've gone through the process so many times, you see that everyone, after like 10 years of trading, just ends up with like a naked chart with a couple lines.
Yeah, yeah, we get so it's like having new toys. You add everything you can, and then once at the end of the day, you realize RSI is actually a pretty damn good indicator. MACD
Yeah.
gives you a great so you can have Market Cipher or Lux Algo or all this, but at the end of the day, part of it comes down to, I think, intuition too, and the intuition is only informed by experience. So if you have poor or lack of experience, then you're going to have poor intuition, right? So what are your thoughts on that, Wendy? How do you deal with not having analysis paralysis? What's your sort of method there?
I just like, one of the things I like to do is, when I first wake up in the morning, like after I've done my affirmations, after I've done like a little workout, my coffee, I like to look at the charts, and I like to do it before I sign online. And the reason why is because bias is a real thing, and like seeing what other people's thoughts or opinions are could definitely impact what you're doing. So I try to plan my trades out when I am trading. Again, I'm not trading a whole lot right now. It's very, very, very few and far in between, just because of the type of market we're in. The name of the game for me is protecting my capital and my assets. And there's a whole lot of emotions. It's a pretty emotional time for a lot of people right now. But anyways, I just like to, do my thing. Do what works for me. I do a bunch of different indicators. I generally like to start off with a naked chart and kind of, add things on. Sometimes I remove indicators. Sometimes I'll use Bollinger Bands. Sometimes I'll use RSI, sometimes MACD, sometimes Itchy Cloud. It really kind of depends. It depends the type of mood I'm in. It depends how I'm feeling. Sometimes there's indicators that work great for me. Sometimes there's indicators or those same indicators don't work great for me. So it's really just kind of, it really depends how I'm feeling. But I always like to kind of note down what I'm doing, my emotions. Am I hungry? Am I tired? Do I know I have a rough day? And I also like to use my gut. And I know that's might be an unpopular opinion for some traders, but I really like to pay attention to how I'm feeling in my gut, because if I'm having a bad day, or if I know I've got a stressful week ahead, I might just want to take a step back and not take a trade. And the reason why is because if you're super tired, or you're not feeling, or you've had a death in the family, God forbid, or you have to move, there's something, um, I don't want to take that risk. I want to protect my capital. And I think it's important that people also know that no action is action. And it doesn't mean that you're weak. It doesn't mean that you're not a good trader. It just basically means like you're not really feeling it. So you're just taking a step back and you're not taking an action. And what you're really doing is just protecting your capital and protecting your plan.
Yeah, I mean, the other thing I think that kind of resonates through what you said also is that people need to have a good understanding and define what their time horizon is when they are entering a trade, when they are what their risk exposure is, of course, their risk tolerance, but what's your time horizon? Because I trade with very, I don't want to say simplistic, but very sort of, like as Scott said, boiled down sort of naked charts with very basic indicator setups when I'm doing longer term, which are usually actually the best trades you can make. Something that's 6 months to 3 years on the massive swings, and just using something like RSI divergences and maybe MACD over a long period of time. But the smaller you get down into, you're going down into 4 hour, 1 hour, 15 minutes, then you're just you're getting, unless you're an very experienced trader, you're giving yourself like an inordinate amount of stress, and there's so much more stuff that you need to pay attention to, whether it be money flow or all these different things. So I really want to impress on people to really define what your timeline is and stick to that. But I want to throw this now to Mr. Root. We haven't had you on in a while, and you've been sharing some master class of charts lately. We can talk anything about what's been talked about so far, or we can dive right down into your charts. But before I do that, I do want to again say I really appreciate all the speakers joining today. Thank you so much for your time, and everybody, please check out their pages. And to you, Root, thank you for being back. How you doing? Get on it, baby.
Thank you so much, Kelly. It's great to be back on here. Nice panel you always got. Great comments so far. I really loved your last questions, because I think it's really relevant also in on-chain. Since it's such a new field, it gained so much traction over the last years that we have so many indicators and we don't really know what works, what doesn't work. And I had some hard lessons myself. I mean, before I thought, for example, that if you look at short-term holder supply, or the amount of short-term holder supply in the market, that you could basically maybe use that to time the market. But it seems it's really bad at that. So I was humbled by that as well. So there's many of these examples, and I'm also continuously learning and trying to improve and see what works on chain and what doesn't. And but in the traditional market, we of course all these indicators, thousands of indicators that exist, they're all based on volume and price. And with on-chain, we really have some new insights, because we can actually look at the age of coins and at spending behavior and so forth. So I do think on-chain is very valuable. It's just still like kind of hard to find out what works and what doesn't. And I've been obviously very busy working on charts, and I do cycle analysis and on-chain analysis. I think we're in a bit of a rough time in terms of the macro environment that we're in. And so it's like the question is like, can we really look at Bitcoin only, or should we consider the whole macro as always? So I think there's kind of two groups to set apart. And so on one hand, we have these really the fat watchers, as I think is a good name for it, that are really like looking at the fat closely and see what how that has influenced the influencing the market. And on the other hand, and what I tend to believe more in is that if we look at past cycles, there's so much in common with these past cycles, and we're below realized price now. I can explain what that is if some of the listeners don't know what that means in a bit, but it's just incredible if you compare this to the 2018 and 2014 bear market. In my opinion, what we can see on chain, the dynamics that are going on, and so we really on the 18th of June, we really had this huge capitalization spike that we could see on chain, which really looks like a bottom formation for Bitcoin if you look at on-chain data in previous cycles. And so that it is quite likely in a way that the bottom is in there, but yet we are in this really uncertain macro environment that it only seems to still get worse, and we're still below realized price. And I actually expect a bit of a slow drag below realized price. Also, the month of September, I don't think we're going to have like a very good month at all, and we could make like another bottom, but it would be in a way more of a slow drag. I don't expect like another huge capitalization spike, because or we would really have to see something going on. But people have been so used to all these this bad news coming out, month after month, and so I think the strong holders, and you can see that on chain, they are really they're left, and they're actually holding up quite well, and I think that is very similar to previous cycles again. So I let you jump in. Maybe you have some questions. I don't know.
Yeah, absolutely. I don't know, for anybody that's watching or listening, I should say, here on Twitter, if you scroll up to the top, you can see we've shared a bunch of tweets and charts from those on here. One of the things I shared was one of the tweets I did about 5 or 6 days ago, and I was even questioning my own bias because I was seeing in the regular charts that I look at this incredible bullish scenario and on chain. And so I basically challenged myself to go through and look through many more charts and tried to identify the bearish case that has been present and on chain. And so I essentially outlined that in 4 different charts that are in there. One of them being the market cap to thermo cap, showing that we never even touched down into what it considers a likely very asymmetric buy zone. And there's a couple other charts in here as well. But the whole point here is, I think it's pointed out a bias, just like in some chart patterns or fractals that I'm seeing posted everywhere right now, which I don't disagree with those fractals. Time will tell how they play out, but I think it's a good reason to reemphasize for everybody, when you do identify an incredible setup, try to disprove it and plan for that as well, because that's essentially what I've been seeing with on chain. And the other thing, we've talked about this last week as well, that a lot of the metrics on chain are based on the historical price. I mean, all of them on the historical price action of Bitcoin. Yet Bitcoin has never faced this sort of economic, political inflation, quantitative tightening, and thus, and a recession. So we're seeing what historic low levels have been. Well, that's in that environment. In this environment, we potentially could set a new lows and all this that aren't measured comparatively with the other ones. So what are your thoughts on that? And when you're looking through, and even when you're making some of your charts, how are you characterizing that in your frame of reference when you're going through your on-chain charts?
Yeah, so what I think it does come down to is that everything is eventually fear or greed, right? Like, so it translates into fear or greed. So all these bad news, the bad macro environment that we in, eventually what decides price is fear and greed in the market. And so in that sense, if you think of other bear markets, people at those bear market bottoms really thought that Bitcoin was dead, that it was done, that it was over. And I think that is different now. I think actually people expect Bitcoin to do very well in the coming years, but just temporarily not to perform that well due to macro conditions. And so therefore, I think actually, you could reason that this bear market, in that sense, in terms of on-chain metrics, could be less bad than previous bear markets, even though the macro environment that we're in is very bad. But I think we have a hodler base. Like if you look at the conviction from long-term holders, and you can see that a bit on chain, you can see illiquid supply, for example, is one of those examples. It's at an all-time high. So it's like, there seems to be this strong holder behavior, and so I think I tend to believe that even though these macro conditions are enormously different, I still think Bitcoin is its own beast, and sure, we are currently correlated with the S&P. I mean, the correlation is incredibly high over the last months, and I also don't expect that to immediately change. So I mean, if we get like a major another crash in the S&P, like, yeah, sure, Bitcoin will suffer. But I do think that over time that correlation will again disappear, and it can actually slowly start to evolve at any moment in time. Basically, if we would get a bit of hype back in the market, and that I'm not going to say that's going to happen in the next months. It will probably take a little longer, but then suddenly that correlation can start to decrease, and so that's kind of how I look at it. I still think, for me, it's very valuable still to compare to previous cycles, because I see so many similarities that I kind of want to believe that we're in total different, macro environment. But if we look at on chain, actually, like the dynamics that are going on are so similar to previous cycles that I think, like, it all comes down to fear and greed.
Yeah, I couldn't agree more with you on that. I think the biggest thing, people that are, only in TA or only on chain or anything, I think what it really is boils down to right now, and I'd love any of y'all's comments on this, is the biggest thing that we're going to be fighting, even if, whether we dip, come back up, or just go sideways. The biggest battle we have right now is, basically recapturing, not just positive sentiment, but fighting that sort of distrust or the fear of another drop. This instability that's permeated the entire market and markets because of this other context. But what are your thoughts on that, Scott?
Yeah. I mean, I think it takes a long time to turn an aircraft carrier, right? And I think that sentiment is in the dumps, but it's not the first time that we've been here. I mean, we did this for years, from 2018, right, to 2020, basically. I think the difference this time is that, and the time is not different, but I do think that we've lost a lot of sort of mainstream momentum that we had because of the collapse of CeFi, right? I mean, this was the last time, of course, you had a lot of people exposed to crypto that lost a lot of money, but those were people who were largely crypto native, or at least understood what they were doing. They were attempting to trade. This time you had your average person in any given country in the world who viewed, Celsius or Voyager as their bank account and parked their money there, thinking that it was safe, and now has entered Chapter 11. And a lot of people are obviously going to conflate the problems of CeFi and all these collapses, hacks, wormhole, exploits and stuff with the actual assets, which is unfair, but you can see how they would obviously get there. So I do think we're going to need some sort of major catalyst, and I can't even at this point really predict what that would be, right? I don't think, certainly nation state adoption didn't really move the needle, right? Institutional adoption is certainly not currently moving the needle. They're literally like, if it was 2017 and you heard that BlackRock was opening a Bitcoin trust for their private wealth clients, the market would have like gone up 400% in an hour, right? And now we get absolutely no movement. And I think there are some other things that are different this time, and it's that we cheered institutional adoption, and maybe won't like what we got because they came, right? I mean, Bitcoin arguably right now is the easiest liquid asset to short 24/7 for any institution, crypto native or otherwise, right? If you want to hedge against the stock market and you're at one of these major funds or something, you can always just trade Bitcoin. And so I think that, we want adoption, but what we ended up with was Wall Street aggressively counter trading us, basically, right? And so that will change. And there's nothing like a quick, no catalyst like a quick bull market to get them to start longing and FOMOing in later. But right now, it's very hard to imagine an immediate scenario where Bitcoin sort of decouples and rises on its own. That said, I mean, I've been pounding the pavement on this for quite a while. Listen, September's historically terrible, so whatever. I don't really care about seasonality. But if you remember last year and years often in the past, I mean, literally on October 1st last year, we had an absolute massive pump and the market mooned for basically 5 to 6 weeks, right? I mean, October was really the only good week we've had since like May of 2021. Really dig in and look at it. It's been pretty much awful besides that one major move. And that lines up with election season in the United States this year. And we have, I think I've probably said this before, you correct me or stop me if I haven't, but there have been 12 tightening cycles since the 1950s. 11 of them markets have performed well. So tightening cycles, hawkishness, all that is not actually bad for markets over a 2 or 3 year period. The only time that markets underperformed was the early 1970s, and there are some similarities now and then. But usually what happens is you have this first 3 quarters where the market absorbs this absolute like nightmare of quantitative tightening and hawkishness. But then it's, things that just becomes the new normal and everybody adjust to it, and markets don't go down forever. And when you have an election and people want to keep their jobs, every single time, even in a tightening cycle, that there's been a midterm election, markets have done well in Q4 and the subsequent Q1 historically. Doesn't mean it'll happen this time, but it's literally happened every single time in the past. So whether it's a major bear market rally or what it looks like, I expect October, November, December to at least be decent.
So, do you think, based on what you just said, do you think that because I've thought about that as well with the news of Black Rock, El Salvador. I mean, there's been other nation states as well that are at least engaging in discussions, if not already enacting some light legislation and stuff around Bitcoin. And like you said, 2017, it would have the second that news came out, markets would be on an absolute explosive tear to the upside. And obviously now that hadn't happened. But do you think, and maybe you and Root can answer this, because I think there's going to be some on-chain metrics that tie into this. Do you think that that's tied more to the market being as high as it is? Do you think it's more because the market, the participants are more mature, or do you think it's because at the stage that we're at in this particular cycle or trend, that retail, which tend to be a lot more, I don't want to say susceptible, but more reactive to these sorts of things that really jump that momentum and increase it, and they're gone right now because there's, basically most small short-term holders and AKA retail have essentially left the marketplace currently. How would you characterize it?
Well, I think that there's some of the reason are actually good things, right? The reason that it would have pumped so massively in 2017 is because you weren't seeing Bitcoin as part of the mainstream narrative. Now, Bitcoin and Ethereum are on the ticker for every single mainstream financial news network on every single show, right? So I think that just we've become a part of the natural conversation on a day-to-day basis. So just like financial news in any other market, it's harder to move the market because of a single news story. So I think that that's actually a signal that the market is matured and that there's a certain level of adoption. You don't hear the Bitcoin going to zero arguments that you used to obviously hear back then, right? And so I think that now, yeah, it's bad for us to say, oh shit, it's correlated, we're trading with these other markets. But if you're sitting on Wall Street, or your average person who's looking for exposure to different things, you can also view that and say, well, listen, Bitcoin's pretty safe, it's trading like these other things, and you can look back and say, yeah, maybe it has more downside in a bear market, but doesn't. Yeah, I mean, you only have to look back to March 2020 to see what happens when you go from the bottom to the bull market, right? Stocks doubled. Bitcoin went up 17 times from sub 4,000 to 69,000, right? So it's a matter of just having conviction in when this sort of bear market is going to be over and start to correct, and then understanding that Bitcoin inevitably will, you trade more aggressively to the downside and to the upside. So I think it's just really the market being more mature and having mainstream recognition. You see people like posting Google Trends, nobody's searching Bitcoin, it's dead. Nobody's searching Bitcoin because everybody fucking knows what Bitcoin is. Well, you need to search what is Bitcoin if 90% of the planet knows exactly what it is. So, and listen, I love on chain as well, and Root can speak to this, but there's also a lot of the on chain stuff that doesn't rationally make sense to me in the way that it's interpreted. But, that's for another day, like hash rate going up, wallets going up, all of those things to me just means there's more people trading and speculating is not necessarily a sign of adoption, and it's viewed as those things, right? And you talk about obviously dormancy and all these things. Of course, there's more holders, there's more people, right? Those in a bear market, the whales never sell, right? Listen, it would be fucking. I'm not saying it's a bad thing, obviously, but it would be terrible, which has never happened at the bottom of a bull market, if all of a sudden all of the old coins were moved and selling off. But that doesn't happen, right? That only happens when we're at the top of a bull market.
Yeah, Root, do you have any thoughts there for anything that's been discussed?
Yeah, so I mean, so adoption really happens in hype cycles. I mean, you have these phases of hype, and then we see a lot of increase of new people, and then again, all those tourists leave, and then basically we're only left with people that build conviction or they go out of the market. Like and actually the last hype wave that we had was in April last year. Like so we have been for over a year in already in. The, basically over for longer than a year already, all tourists are gone, and so therefore we can also not expect price to do much. And actually, what I think that happened is that with the November all-time high, actually, so already the tourists were kind of gone after the April peak, and then we had still people with a lot of conviction that we kind of made that 69K top in November of last year, and so. That was based on long-term holder conviction, and that didn't pay off, right? Like so, because we did no there were no prices above 100K that everyone was expecting, me included. So that did a lot to our confidence as well. Like so people since then, so kind of the long-term holders, the guys with conviction, got kind of screwed there, and so have been since, and so. All tourists are currently out of the market, but also the people with long-term holder conviction, they are just waiting in the market, but they also don't have any expectations because of what happened in November. And so that's why I think it's gonna take some time to get out of this phase. And so, as I said, it's more likely that it's going to be a slow drag. And I agree with Scott that it will probably be until October or so that I expect things to get better. And actually, interestingly, if we look at the 2014 bear market, that actually started in January of 2014, so a bit earlier, but it got only out in October that year. So it took like 9 months or so of bear market below realized price, below the average purchase price of Bitcoin, which is like which we're currently below is currently at $21,500. So we're currently below that as well. And so I think it kind of makes sense from a seasonality perspective as well to still perform bad now this month, and perhaps in October that things starts, that we can maybe get back above realized price. That I personally would be very happy with that, and I think that's the first step. And from there, but I don't expect any hype to come into this market anytime soon. It's more that long-term holders just start slowly building that conviction again, start adding, start DCAing in, and start taking this price above realized price, and it's so slowly moving out of this bear bottom. Because once we set and I think that will maybe be past January, if we're in January or so next year, then I think we could definitely have a lot better idea that the bottom was in. Now it's still a bit confusing. It was like, could we still go lower in the next months? Yeah, sure. I even think 16K is definitely in the cards. Maybe a little lower, but if we are past January of next year, then I think we can look back and we can have a better expectation that the bottom was in and that we're slowly getting out of this bottom zone. And I think it will help also with people that they start because I've actually heard many people in my circles that once price gets back above realized price a bit more convincingly, that they will add more. So those are the types of thoughts. Everyone thinks the price can still go lower, but once that once we're past that point, that everyone believes kind of that the bottom was in, then I think, we can start to build things from there.
Yeah, I mean,
Kelly, can I just make 2 quick comments really quick?
yeah.
Sorry, and I know you want to move on. One being the thing that I guess the question I always have about sort of these dormant whale wallets is, how do we know that they're not dead or all one person? That's always sort of the question I get, because we analyze it as if it's a bunch of different entities who are actively trading the market, and they could have literally like fallen on their head and have amnesia. So that's always a huge question for me. The other one, just to make the point about sort of October, November, December, if you look at the halvening cycles historically, it's about the right amount of days from the last halving for this to be sort of the dead ass bottom, would be right roughly in like late October to early December. So if you believe in the 4-year cycle, that really should be when we bottom and start to rise out of it.
No, I mean, great points. And one of the things I wanted to highlight, and I don't want to call it a silver lining, but in my sort of devious mind, I think it is. With this market, the whole market, like traditional markets as well as crypto markets, pulling back as they have. There's been this argument basically over the lifetime of Bitcoin about the volatility that's involved with it. So people that have been on the sidelines because they don't want to get involved in this speculative asset that's super volatile. Mark Yusko's famous for saying, basically highlighting how volatile Amazon has been every year since it IPO'd. Averaging 30% drawdown every year since they launched. And take Amazon aside, you look at some of the tech gems, as well as other stocks, but tech gems of the last 5 years, 8 years. And some of them, many of them have fallen further than Bitcoin has in this cycle. So I think one of the things that we can look forward to is the start of the change of narrative, the maturing of narrative around Bitcoin. Not that it's not volatile, but that it is starting to, the bigger that ship gets, the more liquidity that's involved within this asset and the crypto asset, ecosystem as a whole. It's these things, the volatility starts to narrow, slightly over time. And, it becomes, I don't want to say more stable, but more stable comparatively than it has, been even 3 years ago. So, but with that being said, I want to bring in, we've sort of left Titan of crypto. We've left him out in the cold. I want to bring him into the conversation. You've been posting some really great charts lately, and some of it's a little bit, I don't want to say contrary to what we've been talking about, because you're posting excellent charts, but you're definitely highlighting some really bullish potentials that are in the chart. So I do want to discuss those, because as much as there's bearish headwinds completely surrounding the crypto and traditional market asset classes, there's always a possibility for that. And I still have this inner bullish child in me just waiting for this to be an actual double bottom, and then we're just going to rock it up from here. But what are you sort of seeing? What are you weighing right now? How are you feeling about the markets?
Hi everyone, hope you're all doing great. Thank you for having me in the podcast. I hope you're hearing me well. Tell me if not.
Yeah, you sound
okay.
great.
It's
you
okay.
Sound
Okay, great. What a great period to be alive, yeah.
It's exciting for sure.
It's exciting, yeah. Yeah, as you may know, I'm not a bear, neither a bull. I think you know that. I like to do broad analysis, whatever the direction may be, and when I see a bullish scenario, I share it. When I see a bearish one, I share it too. I like to use wide range of tools for my analysis, but mainly price action, and I think you may know now, Ichimoku Kinkoyu system, which I love a lot. Regarding the current situation we're in, until yesterday monthly close, I had to admit I was 60% bullish and 40% bearish. Now I'm more of 50-50. I'm going to tell you why. On the bullish side, there's so many indicators showing Bitcoin is close to its bottom or has already bottomed, and that's what I thought. And that's why I still think. I think the bottom was in June, and until proven wrong, I think Bitcoin has bottomed. For instance, all the indicators showing that's maybe I'm right. I mean, for instance, the weekly time frame. You go and check be it the RSI, be it the Williams, they're oversold. MACD looks almost identical as how it looked in previous cycles back then when Bitcoin bottomed. So that's for the bullish elements. And on the monthly time frame, RSI is at the historical low. I mean, it never happened, and MACD looks exactly how it looked in early in 2015, if I'm not wrong. Of course, you can also add the P-cycle bottom that flashed bottom signal recently, the hash ribbons, for those who know it. On daily, it just flashed a buy signal too. In terms of on-chain data, I'm not an expert. I let Root do his thing, but yeah, same for fuel multiple. Bitcoin MVRVZ score has finally left the green zone. I've checked it earlier this day. There are charts that show Bitcoin is currently undervalued too. I mean, all this kind of stuff plus my charts. If you want me to comment it, I can do so. But also, in the past few weeks, market sentiment was so low. I think now it's more like 50-50, but back few weeks ago, it was like the complete opposite of euphoria. It was like depression, okay? But lately, I've noticed it changed very quickly, and it becomes more tricky and tricky at the moment. For the bearish element, of course, you have the macroeconomic context. It's more than concerning. Sure, the word recession is in everyone's mouth except for the deaf. But yeah, also when it comes to TA, there's some arguments too, particularly on the monthly chart I shared recently, yesterday and the past couple of weeks. For Bitcoin, for instance, we've closed above previous all-time high yesterday, which looks good in a way, but yet it looks more for me more like a sentence deferment. Like, I mean, when you look at the recent developments in terms of price action, mainly price action, it reminds me a lot of 2018 price action. As I posted earlier this day, you can see several phases, but painful drop for most of the year, like in 2018. Summer consolidation. For those who don't know what bearish Tenkan Kijun cross is, it's a Ichimoku concept. I'm not going to develop it, but yeah, for those who have a question, I can answer it later on. But it's a bearish sign, bearish Tenkan Kijun cross, and it's on the monthly. And each time it happened, for Bitcoin, I'm talking for Bitcoin, right? A significant drop happened. It happened 3 times before. And I'm not saying that because it happened in the past, it's going to happen in the future or now, just to keep it in mind. And moreover, 2018 was also a year of US midterm elections. And I'm hearing everywhere that it's very, very bullish for Bitcoin or for crypto or for risk on assets. I'm not sure about this, you know. And September usually is a red month for risk on assets, such as stocks and crypto. So that's the bearish elements. And if you check, for instance, the Nasdaq monthly close, it doesn't look too good either. I mean, the monthly close went, I think, back to 12K, something like that, and it could retrace a little bit lower to 11.6K to 11.3K area, I think. And if this, I think you know how it works in terms of technical analysis. If you lose the support, you're going to go lower, and lower it means 10.3K, even 9.5K could be in the card. So yeah, doesn't look too good in terms of macro. When you come back to the SPX, SP500, more like short-term view, okay? It looks like at the moment it doesn't show any bullish sign, no reversal pattern, etc. It's currently testing a very important zone, the one that initiated the breakout recently, and the acceleration of the price. If you go back below it, we will probably come back to test the lows of this area, the summer area, and the reload zone. By reload zone, for those who maybe wonder why what I am talking when I'm bringing this concept of reload zone. Reload zone is simply put um, the area of the 61.8% to 68.6% Fibonacci retracement, just for the record.
So
Yeah.
let me ask you a question with everything going on within the market. Of course, people are trying to identify if max pain is hit or not, if we're going to go up, if we're going to go down. When is it going to at least start going sideways at minimum, to at least create, whether we may already be in it, but along with the same narrative, we have in parallel one of the biggest stories in the history of crypto, especially with how big Ethereum is now. We have the merge coming up with that, as well as the seemingly never-ending sort of waiting game for Cardano with their Vasil fork, as well as the Ethereum 2 merge happening. How do you see those things playing into this bearish narrative, or at least this uncertain narrative that is in the markets right now? If somebody were, I don't want to say looking to trade it, because I feel like if you're not in already, you probably want to wait until you get a clear signal. But how are you seeing the likelihood of price action around Ethereum and Cardano going into these major merges?
Yeah. Regarding Ethereum, I have to admit it looks better than Bitcoin, way better than Bitcoin. Yet it's not, that encouraging, but it's better than Bitcoin. And regarding the merge, I think the question I'm asking to myself is it priced in already or not? Is it priced in or not already? I think it depends on one level, which is 1,700, the 1,700 level. If Ethereum managed to go above and confirm, closing above it, I think there's a good chance, technically speaking, to go get the 2.5K, but only to go back to lower level, in my opinion. But that's a possibility. So maybe until the 15th or the 16th of September, maybe we could see a rally on Ethereum when Bitcoin going sideways, if it goes sideways. Regarding Cardano, but maybe just to stay on Ethereum, if it doesn't manage to get above $1,700, I think it can go back to even 1,000. That's what I think for Ethereum.
Okay, yeah, that totally makes sense. I want to throw it back to Scott and hear what your thoughts are. Same question. With this sort of bearish headwind that we're fighting through, with also coupled with the biggest story in Ethereum's lifetime. How are you feeling like this is going? What would you predict is going to play out leading into, of course, the 15th, and then the aftermath? Is this a buy the rumor, sell the news, or is this just a hold through and let it ride?
I think mostly the latter. I mean, I think we've already seen some of the buy the rumor, sell the news play out, even though it hasn't happened yet. I mean, price went from 800 to 2,000, right? I mean, it basically pulled a 2.5x while Bitcoin went up, 50, 60% or something from the lows. So I think that obviously people have favored Ethereum already, and I think that there's a lot of metrics that indicate that's sort of going to be the more tradable or upside asset moving forward for the foreseeable future. That said, who gives a shit? The merge is huge, but it's not a tradable event in my mind. I think the hype leading up to it is a tradable event. but the merge itself is like the halving, right? It reminds me honestly of if for anyone who's a boomer like me, Y2K, like everybody got really excited about this thing and then nothing happened. Well, that's what the merge and the halving are, because they're fundamental events that are going to take months and months and months to play out. But what's important about the merge, obviously, is that Ethereum can become potentially more deflationary, that, issuance will go down from 5.5 million ETH a year to 0.6, whatever the numbers are, 4.9 million reduction. But that supply drop, even with demand, even with if demand goes down less, should see prices rise, but will take months and months and months, just like the halving cycles do, right? So I don't see why you would just buy and actually, if you want to make the argument, I think there's a lot of people who are buying Ethereum now, or who have been, because they expect there to be a fork and that they're going to get some free coins, right? And futures are basically pricing in ETH POW coins at about $18 a coin. If you want to do the math, you can determine that by looking at futures. But there's been sort of much ado about the fact that Ethereum futures are in backwardation. If you look at the September or October contracts, they're trading roughly $18 below spot. And obviously futures are based just on POS. So if you add POS and the POW fork, that gives you that sort of implied $18 price on the proof of work coins. But that's also a hell of a lot of future pressure, because anyone institutional or a whale who's buying Ethereum spot with the intention of earning those free coins at the fork is also shorting the future, because that's the only way to hedge against that exact move and the uncertainty. So that's going to basically keep the expectation of future prices down, and prices down most likely coming into the merge itself. There's massive, massive pressure. This isn't the same as backwardation. For those who don't know, backwardation is when the futures contracts are trading below spot, usually because markets are generally bullish and people have expectations of prices rising in the future, especially in crypto. Usually you're in contango, which means that the futures are trading at a premium to spot. So I think that's the reason it's backwardation. For years, we saw the cash and carry trade in Bitcoin, which was basically a free way to earn yield. You short the future by spot, or short spot by either one. And I think that's what we're seeing here. So I think there's a lot of shorting pressure right now in futures. And so I don't expect a huge move into the merge, but I expect months after to start seeing it just grind upwards because of the reduced supply.
Oh yeah, I mean, such great thoughts there. And again, I want to remind everybody, please do every one of these speakers a favor of just checking out their profile, give them a follow, see what they're up to. They got a lot going on. They share a lot of content, not only on their Twitters but on their websites, on their YouTubes. They're all over the place. And again, thank you everybody for tuning in. We still got about 25 minutes left or so. But before we get to that, I do want to say that next Wednesday, I'll be hosting my first episode of Be Entertained, which is basically a variation of Crypto Answered here. It's focused more on Web3 and entertainment as well. It's just a more broad meeting show. And our guest for that show will be Mabad Mogadam, who's the original founder of Rap Genius, the lyric site, basically an AI lyric site for songs, which is now known as Genius. He also works with the VC firm called Mucker Capital. He also launched Hella Doge, which is a social network that gives users Dogecoin for both creating and viewing advertisements, which is quite interesting. And I'll be hosting this also with CryptoVet alongside PennyFly founder Jet Prescott, who's also part of the Rolling Stone writing team. And again, we are brought to you by PennyFly Entertainment. They're giving us broad distribution on iHeartRadio, Spotify, Amazon, Apple Podcasts. And all these recordings from these podcasts are up about 24 hours on these podcast sites, 24 hours after this basically live show we do here on Twitter Spaces through my Twitter at Kelly Kellam, Kelly Kellam. But I want to throw it to CryptoVet now. If you had anything you wanted to add, you said you might have a giveaway, but then also any of the thoughts about anything that's been discussed so far.
No, man, I absolutely love everybody's insight. Especially Scott throwing the whole Y2K thing in there. I guess I'm definitely old enough to remember that, and I remember sitting and hoping that something cool would happen. But yeah, no, just to kind of shout out everybody, please, follow everybody up here. During the bear market, this is probably the absolutely the slowest time. Because this is the least amount of interest in crypto, and especially in investing when everybody's having a hard time. The velocity of money has drastically slowed down, right? So during these times, these shows are where you can learn and build the foundation. So I'm really excited to be a part of this. And for me, on the being a nerd, love gaming, all of that, I'm super happy to be a part of Macroverse. Close friends of mine who are music producers and video film producers out in LA. They're trying to make the future of Web3 with comics, and I'm absolutely super excited for this project. So I'm helping with this giveaway here. So if anybody's interested, please hop on there. If you're not, just skip onto it, and I'll send it right back to you, Kelly, and we'll continue on with the show.
Thanks, brother. It looks like we lost Scott, but I was going to throw it to Root now. Your thoughts, if you had any thoughts on what we were talking about with the ETH and Cardano merges. I don't know if I know you're very big on Bitcoin with on-chain stuff, but are you looking at anything in all with any regularity on any of those numbers or metrics with the ETH? Or if not, then what's your sort of general sort of thesis about the likelihood of what's going to be happening here over this next month with those two projects?
Yeah, thank you, Kelly. Well, I very much agreed with Scott's view. I think it's very comparable to the halving. And I think he did a great explanation, actually. So I don't know if I need to add. I don't think I can add a lot to that. I'm obviously more pro Bitcoin. I think I'm also more of a proof of work believer than proof of stake believer in the long term. But I do think, there can be a lot of hype, and we actually saw already quite some hype around that merge happening. So I don't know how much more hype will happen in the next weeks. Even there's also still the possibility that stuff will be delayed. I wouldn't be surprised if it would. Ethereum has a big history of delaying stuff, and in the end, so we'll yet have to see. It will be exciting.
Well, yeah, I totally agree with that. And I want to just, looks like we've talked about most of the things that we wanted to hit today. And I am trying to make more of a point when we do these Twitter spaces to give I don't want to say give the floor, but give the opportunity for some of you listening. If you want to request, you can request on the bottom left-hand portion of the Twitter spaces window. And we're gonna open up the floor for maybe two, if we have enough time, maybe three questions, and then we'll wrap it out. So and you can direct it towards any of us in particular, or you can just leave it open-ended question, and we're happy to bring you up, and you can make a comment or ask a question. I just ask that you keep it pretty synthesized, pretty brief, and we'll jump on it. So if you have any questions or comments, go ahead and request on the bottom left. And until those come in, I'm going to throw it back to Titan of Crypto. If there's any other projects that you see have been bucking the trend, because it seems like the majority of things currently are large in part following the Bitcoin narrative and directionality. Is there anything that you're seeing on any other assets that are bucking the trend, or are you primarily focusing the big dogs?
I'm looking at the big dogs, but mainly the charts I'm looking at right now are the odds against Bitcoin, and there's a couple of odds that shows a lot of strength against Bitcoin, and they are CRV curve and Atom. I find them very, very strong against Bitcoin, and I think in the coming weeks we should see some of them flying a little bit. Other than that, there's a lot of other ones, but I need to dig a little bit more. But
Yeah, I
for
mean,
those that
I do suppose that this kind of, I'm not surprised to hear you say that, because at this stage in the market, anybody that's experienced with this for more than a few years, this is the time in the market that you're kind of waiting for a trend to be defined before you start pouring money into, micro caps or, even smaller mid caps, because they are destroyed immediately with any downward price action on Bitcoin. So I can understand the sort of, I don't want to say lack of preparedness, but just that's not where your focus is right now.
Exactly. Exactly. You sum it up pretty well. Yeah.
But it doesn't look like anybody's requesting to speak. So, CryptoVet, is there anything that you wanted to go over? I know you posted a great chart a day or two ago that I also reshared. Is there anything that you wanted to highlight off that in terms of? I mean, I think that chart kind of sums up this conversation in a way, because we've been talking about the heavy bullish wins, the heavy bearish wins, while also having almost like false signals, potentially false signals of bearish things, bullish things lining up on charts based on historical fractals. So at the end of the day, it seems like there's a broadly uncertain sort of narrative that's not clear. That's kind of what I pulled from your chart. What else would you want to highlight from that?
No, and that's exactly it, Kelly. When we're looking at the sentiment right now, everybody is bearish. So we have thoughts of a potential super cycle this go around, hitting quarter mil plus, right, for Bitcoin. We've had thoughts that we were never going to get down to ever even retesting the 20K Bitcoin, which we have, and we're below now. So lots of these plans all kind of went out. So what I went to was just the simplest plan, which is the halving, right? We have a simple supply and demand equation that is now changing due to coding, right? So as we get closer to the halving, we are going to now increase the difficulty. So the supply is decreased, but the demand will stay the same or increase, hopefully, with how we are currently doing stuff. So that's kind of the goal here. And on that chart, we can see that if we just put the halvings down, we put the top, and we put when the 50 and the 100 MA cross, we can use these as just little time points going through the 4-year cycle of Bitcoin. And if we just follow that cycle, we put that actually about 13 to 14 months past the 2017 top, or 4 years and then a couple months past, we can say that this is the next top, and that's kind of when Coinbase IPO'd, and everything past that is kind of denial until we eventually accumulate down where we're at now. So back in 2017, 2018, we had COVID and other things that could have exacerbated where the money went, right? We went way down to below 5,000 with the COVID announcement, but we went nothing but up from there all the way until February of 2021. So if we are in this accumulation period now, the simplest strategy to follow is I'm just going to buy now. Let's say it does drop. Well, I'm going to have a plan to buy more in the next week. DCAing during a downtrend is more lucrative than DCAing during an uptrend. So from here, we can then plan to have a higher buy-in in the next couple of months. And that's just kind of the simple strategy that I'm going with now. And then as far as when to make profit, anytime past the halving, usually about 6 to 8 months. If you look back in history, that time is guaranteed to be sometime during the bull market, sometime closer to the top. And that would be no matter what. If you stick to your strategy and you're starting to take profits, if you accumulated for the past 2 years, you're going to do nothing but make money.
I mean, I said, God damn, that's I completely agree with that. That's very well put, very well thought out. Well, it looks like we got a request, so we're going to go ahead and answer this request, and then depending on how long that takes, we might be wrapping this one a little bit early, which I'm not opposed to, because I'll be on around the blockchain later with on the BitBoy show, trying to bring some alpha there. So we're going to go ahead and bring up Web3V here, and just when you get up, just make sure to unmute your mic and just form your question or a comment, and we'll get right on it. So here we go. We got Web3V coming up. How you doing?
Hey everyone, doing good. Thanks for the space and dropping all the knowledge. I'm curious on you guys' thoughts on Solana with the upcoming merge. Where do we see that going now that everybody's anticipating the merge and everyone's kind of talking about Solana dying out?
Well, my biggest concern, I was messaging with somebody else about it today with the Hit Network crew, that my biggest aversion, I should say, or hesitation around Solana. I still think it's a great project protocol, but it seems like, I don't know if it's a top-down leadership sort of deal, because it seems like more than any other protocol out there, uh, all sorts of different projects that are either Solana themselves having these issues with DDoS attacks, and then so the throughput issues, and the chain breaks down, and it just happens almost, it feels like, at least once a month. And then in addition to that, it seems like I don't know, I can count at least 12 different layer twos, layer threes, protocols that run on top of Solana having issues on a regular basis. I mean, it's just nonstop, and I'm not really sure why it's so pervasive across the Solana chain. But as an investor myself, it makes me very hesitant. I still dabble in Solana, but I do it with a very tight risk management, because I feel like they kind of put the cart in front of the horse. They're basically the complete opposite of Cardano. Cardano has taken forever to really prove all their stuff, and they still haven't launched Vasil, but once they do, then they're finally unlocking a lot of the things that they've been promising for the entirety of the life of Cardano. But their sort of mission behind that and purpose was they wanted to make sure and scientifically test and prevent security issues and all this sort of stuff. Whereas Solana was product first, consumer later, security later. So that does give me hesitation. I do because of their backing. I don't think they're going to go anywhere. I think they might hit road bumps along the way, and because of that, I'm going to have a lot of tight stops on that. Root or Titan or Crypto or Vet, do you guys have any thoughts on Solana? No thoughts on Solana? Okay.
Yeah.
Okay.
Kelly, I pretty much have the same view as you in terms of fundamentals. Technically, I spotted some similarity recently. I don't know if I can share it with you, so you can share it to the audience. But striking similarities with Ethereum back in 2017, 2019, in terms of price action. It looks to me that technically we might experience on Solana, another drop, but it's not the end of Solana. I think this project is going to do well in the next cycle. That's my opinion. There's a lot of things coming on Solana. Not mentioning the NFT part, but I think Solana will have its share in the next bull run. That's my opinion.
Yeah, and for anybody that's here on Twitter Spaces, if you scroll up to the top, I shared hit the most recent one up there from Titan to Crypto. It's the Ethereum and Solana charts and similarities. But Root, if you have anything, any last sort of things you wanted to say or last charts you wanted to go over, you let me know. And if not, then we'll wrap it out.
Well, just some last thoughts to finish off a little bullish as well. I mean, I think we are very much in an ideal accumulation phase. I mean, anything below realized price. So currently it's sitting at 21.5K is like a great deal. And if we look at previous cycles, we saw that we were actually almost 9 months below realized price in the bear market of 2014, and in the bear market of 2018 it was about 4 months. If we then look at seasonality, it looks likely that perhaps in October we can get back above it, and so that would give us like a 2.5 months basically below realized price, which I think is reasonable. And so if we I think this is just an ideal accumulate, like DCAing all the way in is the best. I mean, I think we can still make another low. In a way, some indicators still mention that we could still reach that 16K or so, in my opinion. So we will see. Okay, so I think accumulation phase is what we're in. And I think, I mean, the setup for Bitcoin is extremely well, actually, because I mean the current financial system has so much trouble, and so I think Bitcoin is just looking into the future is going to be such a great investment, and I'm totally convinced that in terms of fundamentals, Bitcoin hasn't been better. Is better than ever before. And if we think that now we're really correlated with the stock market, a few years back or previous cycle, that was still kind of unheard of. That was like now it's just the average investor allocates to Bitcoin as well, and that makes me so bullish for the next cycle, because once hype is going to come back, price is going to move, and there's a lot of opportunities from people from all kinds of fields to kind of enter. A lot of money can flow into Bitcoin from all kinds of areas, and so I think the setup for next cycle is going to be amazing. Though I still think it's going to take quite some time before we get like a real hype phase.
Yeah, I agree with that wholeheartedly, and I've already identified my DCA levels, and some of them have hit, and I'm on certain assets I'm already DCAing, on others I'm patiently waiting to kick those in. But the last thing I can leave everybody with is remember that price is a reflection of the speculative value of the asset. True investors look at the data underlying the asset, the fundamental data, the fundamental value, and that's network use case, adoption, how much is transacted across the network, all these things. And if you look at any of the fundamental data, as Rational Root said, we are stronger than we've ever been. The speculative value, based on the psyche of what's going on, the uncertainty of world markets, the speculative value of Bitcoin is, of course, plunged. But the fundamental value of Bitcoin has never been better. And the growth adoption curve that is still holding strong, basically correlated very tightly with the adoption rate of the internet. We're on target still to be hitting over 1 billion users of this is just for Bitcoin alone within the next few years. And so, we're still right now under the 100 million mark. So that's a 10x just in user base. So, there's a lot to be said. We are clearly in an accumulation zone. Depending on if you're trading on the 1 minute or the 1 month, you might feel differently about that. But there's a lot ahead. And again, I want to shout out everybody that's been listening to us here on Crypto Answered. Thank you for tuning in. We're here every Thursday. Next week, we will be on our regular time, 7 p.m. Eastern Standard Time. And again, check out, if you're interested in Web3, we will be doing the Be Entertained version of Crypto Answered on Wednesday next week, I think around 6:30 p.m. Eastern Standard Time. And please give everybody, a silent round of applause in your head. And please go and check out all the profiles at The Rational Root, at Scott Melker, at Crypto Windy O, at Washa Gorira, I believe that's right, or search for Titan of Crypto. And then, of course, Mr. Crypto Vet himself,